Hang Seng is up around 70 points.
Maybe a couple of positives that could play out. One is the IT index because the Nasdaq stabilized overnight, and Brent crude prices down $6.
The governor said the CPI fall in December was only due to veggies, and even the FY24 is only 5.3.
Most likely they're going to file in the NCLT today.
The Nifty is absolutely flat, now gravitating towards red terrain.
The market's likely to be range bound for quite some time to come.
We have already reached around 4,500 crores, more than that, order this year.
Almost a 70% going to what we call the micro segment, and typically in the industry parlance when we say micro.
Watching out for Greaves Cotton because there's a massive leadership change or expansion that they have announced across their verticals, both retail, finance, even in the electric mobility segments. Unfortunately, there's not too much of a recovery that we're seeing in the market.
We're very optimistic about the market trends and what market holds for companies like us as we move forward.
There's a discussion going on digital public infrastructure, leveraging national payment systems to enhance cross-border payment arrangements as well.
At this point in time, we do have the mid-cap index, which is down around 0.3%.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me in the studio is Nigel D'Souza. And joining us from the newsroom today is Mangalam Malu. Hi, guys. Hi. What do I even say, right? How flat can things really get? Well, that's been the day today. If you're looking at the Sensex and Nifty, nothing is moving. And I'll make this really short because there really isn't much to say. Extreme caution prevails after yesterday's big slide. That range that we've seen is about 150 points on the benchmark index. It is expiry, so let's see if some volatility actually kicks in. It's the last 1 hour. But otherwise, this is a market which doesn't want to take perhaps too many risky bets. We've had subdued cues from overseas markets as well. And this entire talk around interest rates, inflation, whether we're getting 25 basis points from the Reserve Bank of India in April or not, the MPC minutes, this is not going away. And therefore, the gains are fairly limited. In terms of course, movers and shakers, some buying on steel stocks has finally emerged. IT at least is not being, as badly hammered as what was happening yesterday. But leadership is lacking, Nigel, and I guess that's the issue. Triggers are lacking and leadership is lacking. And then there's this whole interest rate, bond yield overhang. And the result is perhaps on the screen. Well, Surabhi, you're seeming like, in fact, it's a bit of a boring day, right? I think last 55 minutes will be very, very interesting. I hope so. We have expiry that's going to play out. And I'll tell you what, we're expecting a bit of a move. So as positioning goes, today the intraday low was at around 17,455 odd. And the support level was in that vicinity. So we perfectly bounced off that zone. But now if you're just looking at the options data, the sense you get is 17,620. The bears believe we're not getting anywhere close to that mark. So any kind of increase till around the 17,600 odd mark is going to be met with selling. And the premium out there is around 10 rupees. So take an average for the day, it's roughly around 20 rupees or thereabouts. So you're counting on that level not breaking on the upside. If we can trade above that level, today's high is around 17,620 odd. If somehow you can get past that level, then in fact, you could see a bit of a short covering bounce. On the downside, it's almost a given. The bulls as well have taken it for granted that 17,500 is not going to break. And that's close to around 55, 60 points away from current levels. Anything can happen, but the odds are that we won't break that level. So let's see whether or not the bulls can fight back, because the last few days haven't been great for them at all. The Nifty bank is the problem pocket. Every time we go up, we're seeing some kind of selling out there, while the IT index, which we pointed out earlier today, that's doing a relative outperformance, still holding mildly in the green as we speak. Mangalam, what else?
Well, Nigel, you said it, where the 17,600 call is being sold, the 17,500 put has been sold, irrespective of which way the market moves. Those who sold these calls and puts would want the market to stay exactly where it is for them to actually pocket the entire premium. But what I'm looking at right now is, the Nifty bank, 40,000 plus, 40,007 is where the 200-day exponential moving average of the Nifty bank is. And for the Nifty, that number is 17,592. So if the Nifty bank holds above that 200-day exponential moving average, moves a little further, and the Nifty aims, closer to that 17,600 mark, 17,592, then perhaps, like you pointed out, short covering could come by. I'm looking at the broader markets, though. They've been underperforming. At an index level, we've seen the mid-cap index in the red right now. And for most part of the first half of today's trading session, there were more stocks advancing than declining. But if you just take a look at the crisscross lines now, at some time in the middle of the day, these lines intersected, and we have more stocks declining than advancing right now, though it's split right down the middle. So the jury is still out on which way the market moves in the second half. The point is that whichever way it moves, chances are it would be a big move given the sort of option writing that we've seen on expiry day.
Okay, let's see which way that move comes in. Right now things are flat, but we are gearing up for the next 60 minutes. Here's what's lined up on the show for you today. Zee Entertainment slides as the NCLT admits IndusInd Bank's insolvency plea against the company. The street fears the move may throw off or delay the impending merger with Sony. Puneet Goenka, however, maintains that Zee will take all required steps to ensure timely completion of the merger. All the details on that coming up as we go along on the show. The other stock in focus today has been Sonata Software, moving higher in trade as the company has acquired a Texas-based company called Quant Systems. The price is just about 1,300 crore rupees over a span of about 2.5 years. The deal includes an upfront payment of 550 crore rupees. Of course, they're getting some 2 new marquee clients from this acquisition. These are Fortune 500 companies working well for the stock today. We've got some important updates from the Adani saga as well coming in. LIC has disclosed the value of its holdings in Adani Group stocks, and the picture is getting a little somber now. All the details coming up. And from the sidelines of the Kotak Chasing Growth Conference, we'll be joined by Prateek Gupta, CEO and co-head of Kotak Institutional Equities.
All right, well, how do you position yourself in the final hour of trade? We have Mitesh Thakkar who joins us to give us his take on it. Hi, Mitesh. Well, it's been some sort of a quiet day. I was just discussing with my colleagues that maybe we expect some kind of fireworks in the final hour of the series. How would you trade the Nifty? We're virtually unmoved from the word go.
Expiry rate typically will bring about the movement in the last 45-50 minutes. So I think that is a good possibility. But to me, 2 things. One, in case in this volatility you get a pullback closer to about 17,650, I think that's where I would want to add on to short positions. We have taken some profits off our short positions, and because 17,500, 17,450 the support zone, and then you have 17,350, which is the 200 average. So the setup is weak. The idea should be to sell on rallies, but we're not looking at a big expansion happening because of multiple supports at lower levels. So you might get some kind of a trade on the downside, but not very aggressive. So I think that's the way we approach it. But yeah, 17,650, 17,700 zone, if you can get it, maybe if not today, then maybe tomorrow, if there's some positive global news, then I think that will be a better level to short because the risk-reward equation is much more favorable, and you have some space on the downside to make money on the negative side. So I think for the time being, on the index, slightly quiet. On the stock side, Bharti Airtel is something which is breaking down, so that's a sell. Keep a stop at about levels of 770 to 773 here, and a target of around 740 on the downside can be looked at. And the other stock which I like is Torrent Power. That's a buy with a stop below levels of 490 for targets of 525.
Okay, Mitesh, got that. Thanks very much. We'll touch base with you again in about half an hour and see how things play out. Let's get going with a lot of the stock-specific analysis because that's what the day is really all about. Let's pull up Zee. Interesting move on the intraday charts because Zee's managed to show some recovery. I mean, that stock at one point in time in the morning was down almost 15%. Since then, of course, that cut has narrowed to about 4%, but still the street is worried. I mean, there's a big overhang now on what is going to happen with the deal with Sony, and that's because, as we all know, the NCLT has admitted IndusInd Bank's plea seeking insolvency proceedings against Zee. Basically, IndusInd Bank says Zee hasn't paid us what it owed us. Its amount is small, 83 odd crores. But the issue is what happens if this gets into the NCLT and the insolvency proceedings start. Lata is joining in with some perspective and perhaps some of the options that could play out. Lata, do tell us more.
That's important. The source is just legal opinion in the country. Now, the first thing they have to do is to go to NCLAT to ensure that the admission of the case is squashed. Because if the NCLT is admitted, then the management has to go away, the board has to go away, and a committee of creditors will take over, which obviously they cannot allow because then the merger process can't go through. Now, what is the chances? The chances that Zee has is that this is not a Z loan that they have defaulted. Z had given comfort to IndusInd Bank to a loan which IndusInd had given to City Networks. And that is called, I mean, the legal term for it is debt service reserve account. And Z had committed that it will keep at least 1/4 of interest and principal in that account. Now, when City Networks itself defaulted, IndusInd wanted Z to pay up that money. And Z has taken them to court. The case is at the moment in the Delhi High Court. So Z's argument will be that this is anyway a disputed loan and therefore the NCLT should not have admitted it. NCLT actually has discretion. Originally under IBC, NCLT wouldn't have had the discretion. But after a Vidarbha court judgment in the Vidarbha Industries case, the Supreme Court had given discretion to the NCLT to allow or not allow a case. And in this case, it's possible that Z has a good chance to say that this case ought not to be admitted at all. Then there are, of course, other arguments that Z can advance according to legal sources. The default happened during COVID. And at that time, the cases were not admitted. There was a general rule applied that you can't take them to the NCLT. So even maintainability can be argued. And of course, Z can also argue that they were not even heard in the NCLT. They could only give written submissions. So in a way, it was also not procedurally correct that the NCLT followed. These are the arguments that we understand from legal sources Z can follow. And therefore, they could have a good chance, according to these sources.
All right, Lata, thanks a lot for that. Well, we'll go across to Hemang, get his view on Z. But by the way, keep an eye out on NMDC. Now, this is positive news that's coming in there for NMDC. And in fact, it could be quite substantial. Back of the envelope calculation suggests that it could be close to around 1,000 crores that they get because of this particular ruling. I'll just go through it. The Supreme Court has passed a judgment in favor of NMDC in the excess contribution to Karnataka Mining Environment Restoration Corporation. So as of now, they were paying close to around 20% odd, while private miners were paying close to around 10%. The cumulative amount that they've paid is close to around 2,900 crore rupees. So they have to get back some part of that. That could be close to around 50%. So you're working with around 1,200 crores odd that they could get back of the amount that they've already paid. Not just that, in the sales in Karnataka, well, that could be a bit of a booster shot. Why is that, Surabhi? Because now they'll be paying 10%. In the past, they've been paying close to around 20%. That comes down to around 10%. So going ahead, profitability improves. And what they have already paid, well, they get some money back as well. So this is positive. We'll require further details. But, a couple of notes are just coming in, sales notes that are coming in there. And they are suggesting that they've paid close to around 2,700 crores odd. And they stand to get back close to around 1,200 crores odd. And that's why the stock is reacting positively. So good news coming for NMDC. As is, we know that the iron ore prices have been moving up. But this has come as a bit of a positive. They have been appealing against this. So why should we be paying 20% of the total sales value? They wanted to come in par. And I think the stock, the market is taking note of that, and the stock is reacting as well.
Yeah, absolutely. That explains that reaction. This is coming in right from the apex court. I mean, this is from the Supreme Court now. It's a sizable amount of money, as Nigel is explaining. We're talking almost 1,200 to 1,300 crores, and NMDC has broken out into positive territory. Let's bring in Hemang Jani into the conversation as well. Hemang, hi, good afternoon. I'm not sure if you look at NMDC per se, but if you do, some thoughts on this one. And also perhaps on, the entire ferrous space. Nigel and I were talking about it the other day on our digital show as well. It seems the market's getting quite excited about the possibility of maybe price hikes even here in India.
Yeah, good afternoon, Surabhi. I think if you look at the global iron ore prices, we've seen the, prices getting formed up. Also, in case of NMDC, apart from this Supreme Court order, the merger part is over, and large part of the correction across the ferrous metal is also over. And typically, we have seen that, the stock prices correct. And when you see the base commodity prices forming up, these stocks tend to do well. So we feel that, NMDC in particular should see some positive reaction because of this development. And as far as other metal stocks are concerned, I think Hindalco is something that also has corrected, and we do have a positive, outlook over there, because the overall outlook in terms of the aluminium prices is quite okay. The data points are also quite positive. So we have a positive view on Hindalco also.
All right, Hemang, now since you've spoken about metals, etc., I just wanted your thoughts on a couple of stocks. The first one, of course, is Z, that Lata spoke about, the legal options that the company can take. The stock has recovered a fair bit from the lows, now sitting with a cut of just around 4% in the morning. It was down in double digits itself. While this is a bit of a niggle as far as the merger is concerned, there's no question, given Puneet Goenka's comment on the way forward for the merger as well. So would you look at this dip as a buying opportunity? That's the first one. And the second one, in a market which is doing nothing, ITC out of nowhere in the last 12 months is up 80% plus, closing in on that 400 mark. Do you think it's run its course and it may not do as well in the next 12 months as it has in the last 12 months? What do you do with this stock?
Yeah, so Mangalam, first of all, in terms of Z, I think the whole merger process gets delayed. The amount is not small, so a little bit of a surprise as to why company had to, go to this, level whereby the entire merger process gets delayed. Secondly, the IPL is going to start, and typically, if you see most of these general entertainment companies, for 1 or 2 quarters while the IPL is underway, there is going to be an incremental impact on their ad revenues. And if you see last quarter also, company did not report good numbers. So while the stock has corrected quite sharply in the last 6 to 8 months, given this entire IPL thing and this development of today, the stock may remain a bit subdued. So not in a hurry to kind of buy into it. As far as ITC is concerned, yes, the stock has done exceptionally well. But Mangalam, when you look at the surprise in terms of cigarette volume growth, no negative surprise on the budget. Other businesses are doing well. So while the stock has run up, still it is much cheaper compared to most of the other, FMCG staple stocks. So it continues to remain our, top stock in the consumer space.
All right, Hemang, earlier today we had the management of Bharat Dynamics. They joined in and they said that long-awaited Akash missile order is likely in the next 6 months. That's either this quarter or the next one. And they're guiding for solid revenue growth. Quarter 4 is going to be blockbuster. And for the next year, they're guiding for a 20% growth on that. So 3,800 crores odd. Order book is looking good and margins could move to around 20%. What's your view on the defense pick? Clearly, the street likes, what they're hearing. The stock, even in a weak market, it's up close to 3-4% odd.
So, Nigel, what has happened is that companies like Bharat Dynamics and HAL have delivered better performance. Their order book growth and visibility is also better, as is reflected in the guidance that, let's say, Bharat Dynamics is given of 3,800 crore. With incremental orders from Akash missile system and couple of other deals on the export side. Whereas if you see Bharat Electronics, the order book growth has not been that good at all. Even there was a pressure on the margin. So we think that you might see some position shifting from a Bharat Electronics, which also had run up to a Bharat Dynamics or HAL. At the moment, we don't cover these two names, so I won't be able to put out any specific records.
Okay, well, that's a bunch of stocks that we've discussed. Is the market doing anything? Absolutely nothing at all. Down to 45 minutes of trade today. Still waiting for the fireworks that Nigel and Mangalam have been talking about. Let's see. Typically, I think 3:30, Nigel, right? That's when we, not 3:30, sorry. 3 o'clock is when we say that the great 3 p.m. move on expiry day is supposed to start. No sign of it just yet. Let's see how this goes. Hemang, on a wider note, what do you make of things, and how are you navigating a market like this that's giving absolutely no sense of direction? There's absolutely no case for any momentum play here. So, just bottom up, sticking to stocks where you're seeing decent cash flows, growth. How are you cutting this matrix?
Yeah, so Subri, good question. I think we've looked at some of the companies where, the stock price correction has been in excess of 10 to 15%. And where the quarterly numbers have been reasonably good with some upgrades. So to share some of these names, I think Titan is one that comes to my mind, which is corrected quite a bit, where we've seen some stability in the earnings. PI Industries is another stock where the numbers were good. We are looking at a very strong growth. And in terms of the mid-cap names, I think APL Apollo is something that we like. The numbers were pretty good. The stock has corrected in the recent past. So I think it would be a good idea to look out for, the names where the correction has been quite sharp and where the earnings damage is not as much, or the downgrades are not as much.
Okay, got that, Hemang. Thank you very much for joining in today. Great talking to you. As always, we look forward to our next conversation. Need to take a very quick break on that note with the news that the market's absolutely flat. We will take that break, come back and get you some highlights from the Kotak Institutional Equities Conference. We'll have Prateek Gupta joining in, and we'll see what the mood is like given the market has had a mind of its own since the start of 2023. So inputs from the conference and Kotak's calls coming up next.
Welcome back to Closing Bell. Well, the markets are doing virtually nothing. We're mildly in the red as we speak. But I think, we're getting some statements that are coming in there from Mr. Puneet Goenka's office. So I think we should be getting that up for you on the screen. Basically, Z has filed an appeal in the NCLAT seeking relief against the NCLT order. Now, the street was anticipating this, but we've got an official confirmation that's coming in there, Surbi.
Yeah.
And I think we should get some of those lines flashing for you on the screen. They're approaching NCLAT against that order that came in from the NCLT, and they're also mentioning that all stakeholders of Z Entertainment, all their rights will be protected.
Yeah, I guess that could also explain why the stock started recovering. It doesn't really do anything much. It's just that at least Z is willing to put up a fight.
Yes.
Again, to rewind and to sort of go back to the story, just to jog your memory, what happened here. Essentially, Z Enterprises was the guarantor for a loan that Citi had taken. Citi is another SL Group company that went into bankruptcy. Now, IndusInd Bank said that Z did not keep up its end of the bargain with respect to this loan. They were supposed to pay a certain amount. The amount is not big. It's about 82, 83 crore rupees. But since Z did not pay this up, finally, it was IndusInd Bank which went to NCLT saying, let's start insolvency proceedings against this company. The problem there is the moment you get into the insolvency proceedings, Section 7 of the IBC, then the Committee of Creditors comes in, then a whole new set of legalities comes in, the board is dissolved, and then you don't know what's happening to the deal. Who will take a call on the deal and let the merger go through smoothly? That was the market's big worry. But Mangalam, at least I think for the time being, this is playing out along expected lines. We just need to see what happens at the NCLAT now.
That's correct. And, while it is playing alongside the expected lines, a couple of lines from this statement, which, the street is perhaps also taking note of, apart from this development, is that, and the fact they've put it on paper, the fact that Mr. Goenka is taking all the steps, necessary steps, as per law to protect the interests of all stakeholders of Z Entertainment Enterprises and to achieve, and this is written, a timely completion of the proposed merger with Sony. So, the big worry about this, this development wasn't the development, so to say, but the fact that it could actually impact the merger. But now with this, if they're still in, doing everything to complete the merger in a timely manner, that is something that the street will like, and which is what we're seeing in the way the stock has moved as well. It is off the lows, sitting with a cut of 3%, but that 3% is something that we can account for. The issue itself, the bigger cut was on account of, the delay, proposed delay in, or anticipated delay in the merger. If the company is saying that they are doing everything necessary to go ahead and complete it in a timely manner, the street perhaps likes that.
Yeah, but I mean, it's been a long cry, right? I remember the stock went to almost 350, 360 when the merger originally was announced. That was end of 2021. And then since then, it's been about a year, 3 months, 4 the stock has been on a one-way decline, 200 now. And then this development from IndusInd Bank. So let's see how it goes. But for now, I think...
Let's move on. Yeah. All right. Let's move on. Then we have those statements. We'll try to get you the latest update on that. But we have Prateek Gupta, the CEO and co-head of Kotak Institutional Equities, who's joining from the sidelines of the Kotak Chasing Growth Conference. Hi, Prateek. Thanks so much for joining. And apologies for making you wait for a few minutes out there. Prateek, what's the mood like at the conference? We have a bit of a split view out here, whether we're going to be entering into a bit of a correction phase, whether it's bullish or bearish. What's the feedback you're getting, and how are investors feeling about India?
Hi, good afternoon. Thanks for having me on your show. It's a bit difficult to summarize the mood given the scale of our conference. We have something like 820 institutional investors from all around the world and from India, and something like 200 companies. So a bit tough to generalize, but by and large, I would say the mood is neither overly optimistic nor is it overly pessimistic. It's sort of status quo. There are some concerns emerging globally on the outlook for interest rates from the Fed, the Bank of Japan. Inflation is proving to be more sticky than expected, so there are worries that interest rates will go up a bit more. There are still some investors who find India expensive compared to China, so trying to figure out, is India's underperformance over the last 3-4 months, is it sort of done with, or is there still room to move out of India, or should we come back to India? So just remember, bear in mind that a lot of these foreign investors at our conference, they are coming to India in person for the first time since 2019. So for many of them, it's just of a catch-up trip, get an update. They have large investments in India, trying to figure out what's happening with the companies. But in general, most folks are quite positive on the longer-term outlook. A 2-3-year view on India right now is quite positive, seen as one of the few sort of high-growth economies around the world. So the longer-term outlook is very positive. It's just a question of differences in view on the short-term outlook over the next few months or next few quarters. And as far as the domestic investors are concerned, obviously we had a very large contingent coming in from there as well, across both mutual funds and insurance companies. And there the view is, again, slightly more cautious. A lot of these stocks have run up quite a bit since the pre-COVID times. The multiples are higher. Earnings growth is sort of moderating. We've actually seen some modest earnings growth estimate declines in sectors like consumer discretionary related sectors and so on. So, but they're still seeing net positive inflows every month by and large. So more stock picking, trying to figure out which are the stocks which have underperformed. There still might be some pockets of underperformance, is there, and therefore time to catch up. So in general, I would say the mood is fairly lukewarm, not overly positive, not overly negative.
All right, not overly positive, not overly negative. Prateek, you haven't shied away from calling a spade in the past. You've said that 2023 could be a year of mediocre returns for equities itself. So in a scenario like this, what is it that you tell everyone who's attended the conference? What pockets are you prodding them to shift their capital towards? What are your thoughts? What sectors are finding a lot more favor at a time when everyone's expecting mediocre returns?
So our view still remains the same, that we think the market this year, from current levels, the returns will be somewhat modest. That view hasn't changed. But within that also, as you rightly said, there will be some areas which will do well, some will not do as well. The areas that we continue to like, the sectors that we continue to like are, for example, the banks. The banking sector, even from our conference, we had many, both large and small banks, PSU banks coming through. And by and large, the mood over there is still relatively more positive. The worst of the asset quality issues are behind us. Credit costs are coming down. Loan growth is still going reasonably strong. The outlook for NIMs is modest to maybe a marginal decline. No big concerns over there. The private capex cycle is yet to pick up in a big way, so that could actually result in loan growth accelerating. And frankly, from our perspective, we find valuation still by and large moderate, not overly expensive, unlike some other pockets of the market. So banks is one segment. The other is some of the longer-term oriented investors. We also ask them to look at the capital goods companies, where near-term, the headline multiples may seem a bit pricey, but the longer-term growth prospects are very, very strong. After a very long time, both globally as well as in India, we're beginning to see signs of a private capex upturn, and that could be a fairly long upcycle, and you could see very significant earnings upgrades because of both stronger than expected order book flows or even margins, with again the worst of the commodity prices behind us, commodity price rally being behind us. So therefore, banks and cap goods are the two areas which we are still sort of recommending. The areas where we are sort of slightly more cautious in the short term are mainly the consumer discretionary sectors, where for various reasons we are seeing a bit of a slowdown. Both we saw it in the December quarter, and we're continuing to see it in the March quarter as well. In fact, even at our conference, most consumer discretionary companies are not citing any acceleration in demand as yet, ever since the post-Diwali slowdown kicked in for November, December, January, even February is generally going a bit lightish. There are obviously some exceptions here and there, but by and large, you could continue to see earnings downgrades over there as well.
Got that, Prateek. So positive on banks, positive on capital goods and the capex cycle. We're a little cautious on consumer. Got that. Let me ask you about the Adani factor. I mean, as candid as you can be on television, but is that a chat point in the conference? And what's the sense that you pick up? Has the market and participants, have they put that episode behind? Or is it still sort of causing some amount of unease in terms of what might come with the equity values drawing down, what happens to their debt, and those kind of questions?
So I would say that most of it has died down in the minds of institutional investors, at least. Initially, if you recall, when the controversy first began, the biggest concern was about the systemic risk to the market, to the banking system, to the economy. It's obviously a very large group. So that was the main concern. But given the clarifications from the RBI, the finance ministry, from the various banks, individual banks themselves, that concern has actually gone away. And frankly, as far as global investors are concerned, they're very used to seeing some large business groups once in a while having all kinds of troubles. They've seen this in China, in Brazil, in Mexico, Indonesia, etc. So they're not too hassled by these kind of developments. They know that in emerging markets, the risk element is always a bit higher. So you have to position your portfolio accordingly, figure out your position sizes in each stock you invest in depending on your risk appetite. So you get all types of investors, some funds who might be even looking to buy some of these stocks, some who will still not touch them despite the sharp stock price decline, some who couldn't be bothered, who are looking more at, let's say, the banks or the consumer stocks or the IT services companies or cap goods companies. So as long as they're clear that this controversy doesn't impact any of that, then they don't even care about what's happening over there.
Prateek, final question before we let you go. What about the broader markets? Everyone's talking about maybe the Nifty is not moved from XYZ till date. We were at 17,000, 17,500. But you'll ask a lot of people out there, they'll say, my portfolio is feeling like 15,500 or 16,000. Is there appetite for, some of these mid-cap, these small-cap names as well? Because the big compounders will do well in the next 5 years or so. But the real money will be made in the mid and small caps. What's your sense?
So firstly, in mid caps, the way, at least I always recommend people to look at, you might get some really high quality companies which are mid caps, but which may be leaders in their respective industries. So it could be a hotel company or a chemicals company or maybe a footwear company or a QSR company. They may be mid-cap from a market cap perspective, but in their respective industries, they may be dominant players. So I would say, and I would agree with you that in some of these so-called mid-caps, as you call them, there is huge potential over the next 4 or 5 years. There, the concerns are more in the short term, especially more so amongst the local investors who tend to be bigger investors. They have a bigger share of the public float in mid caps than the foreign investors, for whom liquidity is a bigger criteria. Their position sizes overseas, they want them. They typically invest more in large caps, less in mid caps. And for local investors, one of the concerns, apart from the ongoing sort of slowdown we are witnessing right now, is more not about the structural long-term prospects, but more about concerns about the near term, given A, is the demand slowdown we're seeing in pockets of the economy, and obviously ongoing execution risk. But also from a liquidity standpoint, you've seen market volumes come off quite sharply last few months. And the worry is if some global fund somewhere or even a local fund, they start selling or they face redemptions, the liquidity in these stocks has come off very, very sharply, so that can have a disproportionate impact on the price. But equally, some of them see it as an opportunity that if that happens, if the stocks come off due to non-fundamental liquidity-driven reasons, that's an opportunity to buy. But in general, the longer-term folks are not really concerned. They are actually hoping for a correction in these mid-caps and some really high-quality businesses that if a correction comes, that actually come in to buy quite aggressively.
Okay, all right, Pratik. Thanks so much for stopping by, giving us your view, and wishing you and your team a good conference. Appreciate you joining in. Well, by the way, at the start of the show, Surbhi, we promised you that it's going to be a volatile final 30 minutes or so.
Yeah.
And that's the way it's playing out, right? Mangalam,
it's all happening now,
fireworks was promised from the markets, not from us. But just pull up the intraday charts on the Nifty. We're down close to around 60 points in the last 7 to around 8 minutes. So from the time we started that chart with Pratik, intraday chart comes up for you on the screen. The Nifty has moved lower, a sharp downtick. That 3 p.m. move has come about, and the bulls will be hoping that we don't see a deeper gash, because as is from the high of the day, we're 130 points off.
Yeah, we've broken 17,500 in the bargain. Let's see how this goes and whether it stops over here. Just want to pull up some of the key losers. Look at Asian Paints. There's a sizable down move actually on Asian Paints, 3.2% now down. Then you have the likes of Titan, Infosys, Britannia, HDFC Bank. It's a long list. We'll just flash some of the Nifty losers for you as we move into the next story, which is actually a very important one as well. And it's time to get some updates on the Adani saga, specifically LIC's holding with respect to some of these stocks, and the fall in the Adani Group stocks is now beginning to hurt. That's what it appears like. Yash Jain is joining in with the latest. Yash, what are you picking up?
Oh, well, that's correct. So the big headline today is that LIC's investments in Adani Group companies has turned negative. Now, we've put together some interesting numbers supporting the headline, and these numbers also throw some interesting facts. Interestingly, LIC is likely to have sold Adani Group shares worth 6,400 crore rupees in January 2023. How did we reach that conclusion? Now look at the turn of events on January 27th. LIC disclosed that the value of its investments in Adani Group companies was at 56,142 crore rupees, when the same for the same day is calculated taking the December shareholding under consideration. Then in that case, the number as far as the holding is concerned, that comes to 62,550 crore rupees. The difference is about 6,400 crore rupees, or 10% of LIC's holding in Adani Group companies, which is likely to have been sold between January 1st to January 24th. Now let's come to the point of LIC's investments in Adani Group companies turning negative. Now, as of yesterday, value of LIC's investments in Adani Group companies, that stood at 33,632 crore rupees. Adjust this to that possible 10% stake sale which came in January. That will give you the number of 30,221 crore rupees. Now compare this to LIC's total cost of purchase, which is 30,127 crore rupees, and it will tell you that till yesterday LIC was sitting on a mark-to-market gain of just about 94 crore rupees on its Adani investments. Today, LIC's value of investments in Adani companies has eroded by over 500 crore rupees, which practically not just takes away that 94 crore gain left yesterday, but pushes the largest life insurance company into losses on its investments in Adani Group companies.
Okay, all right. Yash, thanks a lot for that interesting piece. We just want an alert for all our viewers. CNBC-TV18, we have written to LIC for a comment, and as soon as we get that, we'll run it for you on the screen. But for the time being, the response is awaited. I'll slip into a short break on the other side. As always, Nimesh will be joining in to tell us what he's picking up in terms of the dealing rooms in D Street Chatter. Our technical experts will be back with us as well.
Welcome back. You're watching us here on Closing Bell live from the CNBC-TV18 Motilal Oswal newsroom. As we speak, the Nifty is holding around that 17,500 mark. There was a brief dip at 3 p.m. It was a move on the downside, but it's now managed to hold on to that 17,500 mark. Most of the writers of options were playing for that 17,500 to 17,600 sort of zone. So any breakdown or breakout out of it would have resulted in a much bigger move. But turns out that currently the street is content with 17,500 on the frontline index. But usually this is the time of the show where we would have Nimesh right next to us, getting us an insight into the dealing room chatter. But as we speak, he is at the Kotak conference itself, and he's speaking to the dealers, etc., and everyone who's attended that conference to give us some more insight in person. Nimesh, What's the mood like out there? What are, the traders, dealers, investors, the participants, so to say, saying?
I'm Mangalam. Sometimes it's good to do a ground check, and that's what exactly I'm doing. I've met a few investors before this link, and I'm going to meet a lot of them after 5 p.m. as well. So broadly, the sense is India has been a market to track from a medium to long term, but in the near term, I guess there are other compelling markets which are doing good. So that's the first level feedback that I've picked up. In terms of today's trade, I guess the expiry-led volatility is clearly playing out, so that's something to watch out for. But unlike yesterday when there was panic, in terms of unwinding, that doesn't seem to be the day today. So a bit of calmness is what I understand. The trend for the last many days has been the FI support, not only large selling, but a bit of buying as well. So that's been the trend today as well. So again, the feedback is the flows are mixed from the larger FIs. From a technical point of view, 17,500 is a very crucial support on the Nifty. We're just hovering around those levels, so that's something to track. If that gets taken out on the downside, then maybe gates will open up for 17,200. That's the overall feedback from a technical point of view. The other important feedback is, Mangalam, there was a lot of margin-related crisis for the last many days at the brokers level. That seems to be have resolved slightly. That's the overall feedback. So maybe the feedback is that coming post the expiry, you will see some bit of volumes picking up and some bit of activity back in the broader markets as well. So that's something to track in the new series. Broadly, on expected lines, we expected volatility, and 17,500 is acting as a strong support on the Nifty.
It indeed is, Nimesh. Thanks a lot for that. In fact, that you spoke to a lot of people. I wonder whether you got any sort of individual stock-related cover from there or not. What's on your list today?
So in terms of individual stocks, the first stock on my list today is Z Entertainment. That's been a big talking point throughout the morning as well, and I know that's been a big volume stock as well. I understand, the intraday dip when the stock was down almost to 12-13%. That was when some of the larger HNIs, some smart HNIs, and some domestic mutual funds has bought into today's weakness. So hence the volumes are on the higher side on Z Entertainment. So that's the first stock. The second stock is Sterling & Wilson. Again, a quiet stock, not much been done in the last many quarters now. A small accumulation has started in this particular stock at a leading FI desk for the last couple of days. So the delivery volumes are quite high in Sterling & Wilson. And there is a buzz of a large, company getting a large international order very soon. So that's something to track in Sterling & Wilson. The third stock is GAIL. We highlighted since morning the CLSA report as well. So the stock is buzzing on the back of that report. But contrary to the report, today for a change, there is selling pressure at a leading FI desk in GAIL. So that stands out. And the last stock is Data Patterns. Again, a stock which has done really well in the last many months. Q3 was very strong for the company. And the overall feedback is that maybe at these levels, you're going to see a fundraising from the company very soon via QIP. So that's the reason why Data Pattern is in my list as well.
Okay, got that. Yeah, I think that CLSA report was very optimistic on GAIL. They were talking about a huge amount of tariff increase. Makes it to Nimesh's list as well. But thanks, Nimesh, very much, and we hope you have a good rest of the evening with the conference over there. With that, let's shift focus and quickly get some ideas going with Mitesh Thakkar as well. He's back with us. Mitesh, so we've had a little bit of a move. It's not too dramatic because the Nifty is holding around that 17,500 mark. What now? What are the ideas?
So the Nifty, I think, has managed to hold on to this level, and that's why I've been saying that selling on rallies might be more profitable compared to selling at lower levels, because there is good support at lower levels, and while the overall bias is negative, I think you would want to see some bounces come in, before you want to go aggressively on the short side. On the stock side, Gas Authority is holding with a good gap up today, and that's BTST. Keep a stop at about 96.75 and look for targets of around 100, 90.5 to about 100 for tomorrow. And I'll take despite the fact that crude has fallen, I think Asian Paints is having a very negative red candle. So I'll take a STVT over there with a stop at 2712 for targets of around 2680.
Okay, all right. Thanks a lot for that, Mitesh. Market's still holding with the cut of close to around 50 points as we speak. Well, let's welcome on our show Sudeep Bantupadhyay, who joins us. Hi, Sudeep. Thanks so much for joining in. Sudeep, in the last 1 hour or so, NMDC has done pretty well. The stock has spiked to the high point of the day. We just had some news at the start of the show that they're getting some bit of relief from Karnataka. Earlier out there, they were paying close to 20% of sales as a duty. Now, they will have to pay 10%. And also in the past, when they paid 20%, they'll be getting some refund. What's your view on the stock? It's one of the biggest movers, in the last 30 minutes or so.
Good afternoon, Nigel. I think the refund they will get is quite substantial, about 1,200 crore initial estimates suggest. And that is going to be, that's excellent news for NMDC. Also, as far as the overall business is concerned, we are getting positive on the ferrous side of the metal pack. And NMDC definitely does look good. The restructuring which was supposed to happen has already happened. So it's a pure play ferrous company. And with the global markets of ferrous picking up, there is probably an opportunity for further price increase as far as their product is concerned in India. So at current level of around 117.18, I think it's positive. Investors can look at nibbling into this.
All right. Meanwhile, just keep an eye out on Mahindra Lifespaces. There was some flash at the bottom of the screen talking about the resignation of the MD and CEO. I remember Mr. Subramaniam joining us, just a few days ago, detailing the growth plans for the company, etc. So we need to get into details of what exactly transpired out there. Mahindra Lifespaces from the highs has seen a bit of a smidge, still sitting with a gain of about 2.5% Sudeep, your thoughts on Bharat Dynamics? We had the management of the company joining us this morning talking about growth plans for their specific products, Akasha missiles, etc. In particular, your thoughts on the stock? It's flying away as we speak.
Well, absolutely. I think the entire defense pack has been going great, and they have rewarded the investors also handsomely over the last 1.5 years. Just one small point is that, considering the valuation at which, let's say, Bharat Dynamics is currently available, I'm a bit cautious. I don't think I will advise taking fresh position. But if somebody has to look at, the entire defense pack, I think after correction, Bharat Electronics does look good, and investor can look at that. The other stock in the defense pack, which I like, is Mazagon Dock. I think, again, there has been some correction there. Post-correction, it does look good. The entire submarine manufacturing has, brought a completely different dimension to this company. Also, they are extremely cash-rich. So that augurs well going forward when the capex will be required.
Sudeep, hi, good afternoon. I just wanted to get your thoughts on this whole Z saga. I mean, I remember a year and a half back, 350, 360, this was this gigantic media merger and, stock was flying away. Even today, Mr. Puneet Goenka is reiterating that they're committed to the deal, they'll do whatever it takes. But the question is that, whether this now goes in the creditors' hands, then the game changes. Your thoughts on the stock? It's only 200 now. Would you at all, play for a flip?
Surbi, I think, morning I was telling investors to look at buying this stock because this particular IndusInd episode, the way we look at it, will get resolved and the merger will be back on track. Yes, it's an irritant and it has to be resolved. They will do that. The correction which happened today morning and even now, I think, for an investor who has 6 month plus time horizon, it's a good opportunity to buy. The way we read it, merger is going to happen, the way NCLT has passed this order probably will be revoked by NCLT. Of course, it's the realm of the legal matters, how it is handled. But our belief is that for an aggressive investor, it's a good opportunity to buy into this stock, taking opportunity of these sharp corrections.
All right, Sudeep, that's all the time we have today. Thanks so much for joining and discussing all the stocks that we quizzed you about. Wishing you a good evening ahead. Well, for the time being, we'll slip into a short break. But when you come back, we'll wind down the markets and we'll wind down this expiry as well. Stay with us.
Welcome back. We have just about 2 minutes to go before the day closes out. It's very indecisive, nothing sort of in terms of a directional sense on where this market really wants to head. By the way, some of the European markets have been holding out better than us. That's something that we need to take on board. Let's see what happens in overnight action on Wall Street. But for what it's worth, we are going to go home with a loss of about 25 to 30 odd points, 35 points actually, on the Nifty. Mid-cap index is absolutely flat. The good news was that in the last 40-odd minutes, the banks tried to fight a little bit. Otherwise, this would have been perhaps a bit of a nastier cut. The bank Nifty is actually now probably ending in positive territory, 60 points higher thereabouts. So some fight back there. We've been talking about commodity stocks. A lot of the names like Coal India, Hindalco, Tata Steel, they've done pretty okay. And you have names like SBI, Kotak Mahindra Bank, these banks. They've managed to hold things together. But I guess, Nigel, it is still a jittery market. It's still a little all over the place. And we end the February series on a fairly indecisive kind of fashion.
Absolutely, Surbhi. It was that sort of a day, and the bulls at least will feel that we managed to defend the 17,500 odd mark, because in the initial few minutes itself, we had gone ahead and broken that mark. What did well then in today's trading session? From the broader markets, you had Indus Stars that was up closer around 6%. Oh, that's been a volatile stock. Indian Hotels, questions whether or not the best is behind them, but that stock popped back up in trade. CLSA upgraded Gale, so that one was up close to 3%. And Federal Bank as well participated on the upside, up 2.5%. Kind of a relief rally is what we saw in Dixon Technologies as well as NBCC. On the flip side, Vodafone Idea was down 4.5%. You had India Bulls Housing Finance that was down close to around 4%. Z Entertainment, by the time we wound down, was down only around 4%. The Nifty Bank, well, that ended with a gain of close to around 100 points approximately. But still, the good news, I think, was at least the broader markets. There was some kind of buying that we saw. The mid-cap index ended more or less flattish or mildly in the green by the time we wound up, telling you that maybe there is some kind of buying at lower levels for some of these broader market stocks, which, keep in mind, have got absolutely trounced.
Yeah, absolutely. I think it's a lot about those individual mid-caps, because the large caps, look at Reliance, look at L&T, HDFC Bank. The big boys are still feeling the weight, really, and we're not seeing any sign of decisive leadership. Well, that's this Thursday for you. Expiry is done. We are going to take your leave. But of course, we start a brand new series, a brand new month from the market perspective tomorrow. We'll be back with all the action. Don't go anywhere, though. We have a lot more coming up. Our Thursday special big deal on the other side in just a moment.